Welcome to the July 9th, 2018 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with the charts and graphs that bring to life the global financial markets. I'm also president of McGowan Group. Be sure to set your time to come down and meet the team that cares for your own brainstorming session. First weather report here, Dow Jones Industrial Average. This is the mid-year client update for McGowan Group clients, and one of the diagnoses of the market that's proven correct we made back here, a range-bound market. The Dow hit 26.5 early in the year. There's your winter storm, which took it to near 23,000, 24,400 loosely at the end of the week. That means we're range-bound, likely for an extended period. So where do you get the returns? We're about to cover some of the best ideas in fixed income and observations that can help you develop a portfolio to weather a range-bound market. This is oil versus the pipelines, the more colorful, burnt orange for oil. Now about $72, $73 a barrel at the end of the week. And what we've noticed on the pipelines is a substantial lag from the lows set in 2016. We updated this chart to include 10 years of correlation. The difference from this low point, about 33% for the pipelines, about 151% for oil. If the pipelines catch up, that's substantial gain potential with large amounts of cash flow from current earnings of these companies. That is one of the better opportunities that already had its bear market cycle and pays you to wait. Emerging market debt could be another bargain category here. Notice by this measure, this is one of the larger bond funds by one of the major providers, and what we see is a substantial discounting from the highs, of course. Estimated par value under control is a measure that McGowan Group has actually done to measure how much per share does a bond fund actually control versus current price. These discounts are as much as 20 or 25% below the estimated par value under control, with yields above 7%. That could be a gain opportunity plus the monthly income. This category, by some measures, is as cheap as the crisis, and you can see the recovery there afterwards. This could be one of the better fixed income opportunities, one of the best since early 2016 when the credit markets froze concurrent with $27 per barrel oil. Now we get to the interest rates. This scale with the green graph is the short-term interest rate essentially dictated by the Fed. The T-bill, of course, mirrors the Fed funds rate due to bank arbitrage. But the 30-year Treasury is the blue. Now, this is just below 3% this week, and notice the drop in the 30-year. The two different scales say 3% on the blue line and nearly 2% on the green line. Very little difference. That's a flattening of the yield curve. Who's buying all those treasuries? Our report this week at NetWorthRadio.com covers $8 trillion in bonds that trade at a negative interest rate, where you pay money to own them. It's been common in Switzerland, but the total has expanded to $8 trillion. A 3% treasury apparently looks pretty good to those folks, and it means that the long interest rates don't actually have to go up. Good news this week, which would normally push bond yields up and prices down. What we saw, 155 million people employed in the United States for the first time, 10th record in the last 2 years. That's an amazing figure. And we would normally expect wage push inflation to do a rate spike on the long end, damaging bond values. It hasn't happened so far. That $8 trillion in negative yield, part of the equation. But the good news right here at mid-year to celebrate July 4th, record employment. Thank you for joining us. I'm Spencer McGowan, host of NetWorth Radio, president McGowan Group, and your financial weatherman. Be sure to subscribe because we have breaking updates when financial storms hit the markets. You'll get a notification with portfolio strategy discussion that you just can't get anywhere else. Thanks for joining us. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.